Are you a scaling SaaS founder?
Ready to make the leap from leading a team to leading an organization? Join us each week as we refill your think tank with actionable tips and strategies from great business minds you know and those you don't know yet. This is SaaS Fuel with your host, 5-time entrepreneur, SaaS founder, and globetrotting adventurer, Jeff Maines.
Welcome back to the SaaS Fuel Podcast, where our mindset is like a kaleidoscope, constantly shifting, revealing new patterns of thought and paths to success. I'm your host, Jeff Maines. I help B2B SaaS founders like you grow from traction to scale. Here, growth is more than just numbers. It's about crafting a future-proof company, premium valuation, and leaders who build a business of significance while living epic, adventurous lives. A few weeks ago, I did a 2-day deep dive with about a dozen executive leaders. A common theme was being stuck at their current revenue level. And it's predictable. If that's you, I bet I can guess exactly where you are in two guesses or less. It's a normal problem, and there are a handful of ways to solve it. But one that I always like to start with, because it works like magic, is completely counterintuitive. And sometimes when I bring it up, it ruffles a few feathers. And in a world that is obsessed with scaling at breakneck speed, I propose a radical idea. What if zeroing in on a niche market could be the secret sauce to explosive growth for your company? Sounds crazy, I know. There's an entire chapter on it in my first book, Small Fish, Big Pond. But the premise is this: to get big, go small. Pick a very specific market and double down on it, especially if you're struggling to break through a revenue ceiling under, let's say, 10 million ARR. So, what do I mean by that? One of the companies there was a SaaS that offers proposal software and ROI calculator. Very good at what they do. A couple of years ago, we had the same conversation, and they were stuck at around 3 million ARR and made a bold decision to focus solely on serving digital marketing agencies. It's like, what? Wait a second. The whole world needs proposals and everyone wants ROI. And that's exactly correct. But hold that thought for just 1 second. By tailoring their product and messaging to that specific niche, they were able to differentiate themselves from the competition and experience rapid growth. They went from 3 to 5 million ARR in 12 months and continue to grow exponentially since then. And now they can serve the rest of the world and expand out, add other niches, new markets, and more. But it was really focusing in for that period of time and getting very specific on that market that they serve. So, how can you apply the same strategy to your SaaS company? Here's a 3-step framework to find riches in the niches. Number one is you want to analyze your current customer base. And the funny thing is, lots of leaders do this and are really surprised at the eclectic mix of clients. Early on, they just said yes to everything. But what works early doesn't always work later. So take a deep dive into your existing customers and identify the specific niche or vertical that's, one, maybe generating the most revenue. Two, could be showing the strongest engagement with your product. And the third, and we'll say and or on all of these, is most profitable. Which one has the biggest size or biggest average contract value, or maybe is the most profitable. These are all very good clues for a really good target niche. Second is you want to align your product and messaging. It's that message market fit. Once you've identified your target niche, tailor your messaging to speak directly to your ICP in that market. Market message fit is really important for scaling, and more specific you can make it, the better. Very, very specific pain points and challenges. Make it clear that your solution is purpose built for their needs. And then third, double down on your niche. And this is a little bit scary, I think, for a lot of founders, and it has been for me in the past as well. But focus all of your marketing, all of your sales, all of your customer success efforts on serving and delighting your target niche. Think depth over breadth. Become the go-to solution in your specific vertical and watch as word of mouth referrals and industry recognition help fuel your growth. You become the expert. The key takeaway here is that niching down can be a counterintuitive strategy that helps SaaS CEOs smash through the revenue ceilings, whether that's 3, 5, 7, 10 million ARR, 20 million ARR, or more. Focusing on a very specific vertical and tailoring your product and messaging accordingly can set yourself apart from the competition who is just going after everybody and has very general messaging. It'll also help you build a loyal customer base and unlock the rapid growth that you've been looking for. So, if you're feeling a little bit stuck at a revenue plateau, don't be afraid to think small. It might just be the key to scaling up and achieving your big ARR goal and beyond. To get big, go small. Our founder on Tuesday was Joran Hoffman, founder and CEO of Redditus, a SaaS affiliate marketing platform. We talked about building two sides of a marketplace, product led growth, and leveraging a large affiliate sales force. And our expert last week was Arthur Petropoulos, founder of Hillview Partners. He gave great insights on how to make your company attractive for investment or exit, plus a handful of common mistakes founders make that sometimes cost them a small fortune. If you missed either one of those episodes, go back and give them a listen. Absolute gold. My guest today is Asia Orangio, founder of Demand Maven. She is a growth strategist helping SaaS founders and their teams achieve their objectives through effective go to market strategies, customer research, and positioning. She was on the board at Moz and led Hull's marketing to 10x growth. Welcome someone who continues to uncover new growth avenues, Asia Orangio. Hey, Asia, welcome to SaaS Fuel.
Thank you so much for having me. It's a pleasure to be here today.
Tell me about your journey in the world of SaaS. What led you to specialize in go to market strategy and growth?
Yeah. Oh my gosh. In a way, I think it was by chance. So I had worked at an enterprise consulting firm for a while where I ran marketing, but I also consulted on strategy. And after that, I worked for two VC funded startups here in Atlanta. And there was a time in my journey where I had this idea of what if I offered some of my marketing services, but without necessarily being a full time employee. And turns out it became that and so much more. And I went from focusing exclusively on marketing to expanding more into go to market work and expanding even more into strategy, growth, even really fun things like behavioral science and how do we impact how people make decisions or buy. And it, I don't want to say I kind of fell into it, but I also did kind of I just ended up here, I think, because it just became really clear to me that a lot of early stage founders, especially, need a lot of help with making the best possible decisions to ensure their success. And so
Yeah.
it just kind of evolved that way naturally.
Oh, that's great. I think it's something that is maybe a little bit misunderstood when we talk about go to market. How is that different, like a go to market strategy, different than, say, sales or marketing or kind of a tactical approach?
Yeah. So sales and marketing, this is how we think about teams. These are departments, these are functions of a business. Go to market is how all of these things come together and combine into a whole unit that ultimately supports, it creates the foundation for the business. So we're going to use Brian Balfour's four keys here. So if you know Brian Balfour and his work, he gosh, he has a whole bio that probably needs no description. but when we think about go to market, we're going to use Brian Balfour's four quadrants. So there's product, there's market, there's model, and there's channel. Product is pretty obvious, but market is who are we ultimately selling to? Channel is how do we acquire them? And then the model is how do we package this product to sell to the market? And those four things combined create go to market strategy. That's not something that's defined by one team. It's defined by all the teams and leadership. And usually it's defined by the founder from the day that they create the product and they start thinking about how to actually go to market with it.
So, how does somebody decide what a good go to market strategy is? How do they get to that point where they say this is the right way or this is the best way for us? Maybe not right way, but say that the best way for our product, for our company.
Yeah. So I think the truth is that, go to market strategy evolves over time. It's never just the one thing forever. But what I will say is for very early stage companies, you can tell that your go to market strategy is working because you are growing and you are hearing not only positive feedback from the market, but you're also seeing customers buy and stay. And that is really the marker of that you've got something going on. When we start looking at growth, all that really means is that our go to market strategy has likely evolved to a place to where it's going to be able to sustain meaningful growth. And usually that means that go to market is pretty solid. And now we have to figure out other parts of the business to optimize, to improve. It could be marketing, but it could also be product. It could be product marketing. Like there's so many different aspects of the business, of course, that we could focus on. But go to market ultimately does evolve over time. I think a lot of people think that you create it once and then you never think about it ever again. But the truth is that you're always reevaluating and making sure that you not only have a very strong product market fit, but also that you have a very clear understanding of how to actually acquire customers and that you're presenting a model that is palatable to the market, but also is still going to be beneficial to you at the end of the day. So it's a mutual win and no one feels like they're losing out on anything.
I think that's a really good way of looking at it, where you're looking for a win for everybody in the equation. What types of frameworks do you use when talking about go to market? I know we talked a little bit about jobs to be done. How does that work, and what other ones do you look at?
Yeah, jobs to be done is a great one. I mean, apart from the four quadrants, the four pieces of go to market strategy that I mentioned earlier, I
Yeah,
mean, there are tons of frameworks that we can use, and it really depends on what area do we feel like is missing when it comes to really understanding the market, understanding the product, and understanding potential channels. We always start with customer and audience research. Both of these two things combined help formulate and inform the ultimate go-to-market strategy. And if we're not doing that, then we're missing something because otherwise you're creating in a vacuum and you're creating in a box and you don't actually have any real, you don't have any real validation from the market, even verbally. And then of course, like when you create the product and sell it, that's the real true marker of validation. But jobs to be done is a great way to conduct customer research or even audience research and to really understand how do prospects make decisions about when, where, and why they buy. And also, what are the trade offs that they make when they make a purchase? And what we find time and time again, we have run thousands of customer interviews. I've been running Demand Maven for 6 years now, and Jobs to be Done has been a part of our arsenal since day one. And running thousands of interviews across all kinds of consumers, like any and every type of buyer that you can imagine, everything from CMOs of huge enterprise companies down to consumer, mom and pop shop, or even like, buyers of like toothpaste. Like we've talked to everyone. And what we find is that it's usually rarely ever just one thing that creates the scenario for someone to buy. Usually it's several things that happen that stack up that create the circumstances upon which someone buys. And not just that they buy a solution or buy a tool or buy a product, but they buy a specific tool or buy a specific product. And that's what's really interesting too, is the more that you leverage research and also jobs to be done specifically, the more that you learn about how your buyer thinks. And that helps you not only create a better product, but it also helps you create better marketing, create better sales
yeah.
pitches, create better everything. I would say jobs to be done, it's easily one of the most powerful tools that we leverage. But of course, there are like a couple of other frameworks and things that we use, especially when it comes to helping determine the model. So when it comes to go to market for the model, meaning like, what do we charge? How much do we charge? Do we offer plans? Do we not offer plans? Is it like a one-time thing or is it a, every month thing? Whatever it is. There's a couple of thought leaders in this space that we definitely look up to. So people like Patrick Campbell and
Sure.
also like Elena Verna, if you've heard of her.
Yep.
But monetization strategy really comes down to, of course, like your understanding of your go-to-market strategy and your understanding of your market. But also we use things like the Van Westendorp pricing analysis or price sensitivity meter. We also use what's called a max diff survey. That is a very specific type of survey analysis that we do. But all of this, like you can learn at many different places like this podcast, but also places like Reforge. So you
Sure.
can learn more about, those types of frameworks there as well.
Yeah, I love that. When you're talking about pricing, I think it's one of the key things in figuring out. It's certainly a big part of a go-to-market strategy. So, how should founders be thinking about pricing their product?
Oh my gosh.
Obviously,
Yeah.
it's not just go copy what the competitors have, but what is a better way?
Yeah. Oh my gosh. Okay. So the better way is, I mean, it comes down to research and testing. So you need to have conducted the research. So are
Mm,
there competitors out there? And also not just direct competitors, meaning like a one-to-one copy of your product, but also what are the alternatives that people are considering? And if you do jobs beyond research, you will learn what the alternatives are, what people consider and why they choose those alternatives and maybe they don't work or why they don't go for those alternatives. But having understanding of how much do the alternatives cost, whether in time or in just like actual cost. So for
Sure.
example, spreadsheets, a lot of tools compete with spreadsheets. Spreadsheets are at this
Right.
point are basically free. So you've got to think about like what is the actual cost or the opportunity cost of not using your solution. And then and yes, like there's going to be direct competitors, of course. Like you want to get a sense for like what are people generally charging in the market because that'll give you an indication of maybe what the market will sustain. But really, the best tool is going to be for most people, it's going to be a Van Westendorp price sensitivity analysis. This is something that you can go and Google this, you can research this. It's a very simple survey that you would run / interview that you would run. But the goal would be to do a combination of running surveys, but then also running interviews where you have people just like look at your platform, look at your tool, your product, and from there get like based on your description of it, have them describe to you like what would be a price that they would pay. But the tricky part here is that when you're very early stage and you don't have a whole lot of customers, you're going to have to go by what people would do, not what they actually do. But once you actually start to get paying customers, you're going to have a lot more hard data on, okay, if I'm charging this much and I'm getting this many customers, and if I increase the price, like let's see, if I get any drop off or if I attract a different type of market. That's where you can use these processes to inform your strategy. But what I don't recommend is you're going to get to a point, at least in the early stage journey, where just increasing your prices can actually be kind of a dangerous pitfall if you don't have the data to back it up. What I mean by that is you're going to hear a lot of feedback. You're going to hear people like on Twitter and LinkedIn and in different spaces like this that say just, oh, we'll just like triple your price and see what happens. And I will say that only goes so far before you have to do some deeper analysis. So that's where MaxDiff comes in. MaxDiff basically says, don't just ask people what features they value the most on a scale of like 1 to 5. That is not going to give you data that you're going to be able to action on. Instead, show them your list of features, but then say what's most important to you and least important to you, and then calculate differences on a per feature basis. And what that's going to tell you is what types of people value what types of features. And that's going to help you inform what should go in what types of plans. And when you combine this with Van Westendorp, you also get even more data and more insights, and that's going to help you inform your strategy in the future. I cannot tell you how many times I've worked with founders who, they come to me and they're like, we're struggling with growth. We think it's marketing. And actually what it was, they changed their pricing 2 years ago, and it's completely killing them on the net revenue cohort retention rate. So what we find out is like actually they have a retention problem, but they think it's marketing. And actually like what really happened was we can trace it back to, well, what happened 2 years ago. It seems like you had great net revenue cohort retention then, but then it like tanks down to something like really sad. And like what happened? Oh, well, we changed our pricing and we just like tripled it. And seemed like it was, it seemed like it worked. And it was like, yeah, but like, growth is stagnant. And so it takes a while for those types of things to show up. But when it does, you can usually trace it back to like, oh, we just like tripled the price and like didn't really do much beyond that, beyond just like increasing the rates and not having the right processes, unfortunately, to determine like what should the model be. But I digress. That's me on my high horse a little bit. But it's easy for me to come in and say like, oh man, you should have done all these things. But to be fair, there's so much information out there. It's so hard to discern like what should you do, what shouldn't you do. What I can say is, yes, like increasing the rates, like that's going to help for sure with growth, but you're going to get to a place to where you can't keep doing that without doing some form of like strategic work. And that's where people like me come in.
Right, right. When you're doing that, the surveys initially, maybe you're really kind of looking for that product market fit, trying to figure out what the pricing is, and you're doing the surveys. And what I found is a lot of times when you ask somebody, would you buy this? Yes. What price would you pay? And they'll give you a number. And then if you ask the next question of, do you want to buy it? It's no, or, I just bought a product like this, or, some excuse, why not? How do you separate that signal from the noise and know that you're getting good data so you can make decisions on that going forward?
Before you are live go to market, meaning like you're actively selling your product, you're really not going to know. And that is the curtain that you're just going to have to wait to pull back until like you actually go live and you start to try to actually sell it. The real testament is selling it, actually putting it out there for people to buy and seeing for better or for worse, what happens. So before you are really selling your product, it is going to be really tough. I actually have a phrase for this, and it's called the SaaS black hole. It's the hole of unknown that you're just not going to know until you actually sell. But the chasm that you have to cross is, yes, like gathering the insights and the data that you need with a healthy amount of skepticism of knowing that you're really not going to know until someone is swiping that card. But also, once you actually do get to that place where you have launched, you're live, you are, telling the world about your product, you're seeing either signups come in and you're watching hopefully for conversions, then this is where rubber meets the road and then the real journey begins. And what we find is in the SaaS black hole, which you cannot escape until you are actually getting your first 10 to 15, 20 paying customers, is most founders, when rubber does actually meet the road, because a purchase requires a trade-off. I am giving you money in exchange for something else, but I am also sacrificing, again, all of those other alternatives. And if you do your research, you will know what those alternatives are. And it has to feel effortless and worth it. And that exchange, that trade-off has to be overpowering for someone to become a paying customer. But what ends up happening is a lot of founders, when rubber does ultimately meet the road, they discover a lot. They suddenly might discover that, oh, the type of customer that I thought was going to be the buyer is actually not the buyer, it's actually someone else. Or sometimes they find that there's a huge feature that is actually missing from the product that's preventing people from buying. And so that's where version 1 of the product suddenly becomes 2 or even 3 of the product by the time that you actually start getting your first paying customers. But that process, it's unpredictable. I've seen some companies in that space for years. I've seen some companies spend weeks in that space. Your mileage may vary 100%, but it's a process that you can do your absolute best to de-risk as much. You can mitigate risk as much as you possibly can, but you still won't know until it meets reality. And then I would say when it does meet reality, that's when the real strategic work begins, because now you have finite hard data and now you can
Yeah.
actually start to use that to inform what you do next.
So what does it mean to be data driven in a business context? And how do companies go beyond just tracking numbers to truly leveraging data to make decisions?
Yeah, that's a good question. It's so funny. I've worked with hundreds of founders by this point, and I think truthfully, only a handful of them are actually truly data driven. But
It's
data driven means that when you make decisions, you are going to leverage data. It does not mean that you are going to look at data and then make decisions. So a lot of people think being data driven means I'm just going to look at these numbers and the numbers are going to tell me what to do. That's actually not necessarily the case. It's really much more
right.
like you have decisions to make. Now let's leverage data in addition to other types of information. Now, not all data is numbers. And this is where a lot of people get stuck because they think data driven also means I am just going to look at quantitative information, conversion rates, volumes, whatever it is, numbers in general. But a lot of people don't realize or they forget that there's this whole other side of data that is qualitative. Qualitative data is just as critical, if not more, I would say, than quantitative information because quantitative cannot tell you why something happened. If your conversion rate
Hmm.
on a free trial B2B SaaS is 5%, the 5% can't tell you why. But founders especially fall prey to the concept that just by looking at the number, that's going to tell them maybe what the problem is. But the truth is that quantitative data cannot tell you why something is happening. It can only tell you what, upon which we've ultimately defined. So,
Yeah.
it's like a self-fulfilling prophecy. If I define activation rate in a particular way, then that's the number, regardless of what it actually means. So, this is where I would say being data-driven, people think it means if I just look at the numbers, it's going to tell me what to do. But the truth or the flip version is I need to make decisions. Now, what data do I leverage? That's what data-driven actually means.
Makes a lot of sense. I'd like to look at it like, data will tell you something that's quantitative. It says dig here. And then so it kind of tells you, where the problem is likely at. And, just in knowing what the numbers are, you can see the outlier. And that's where you know that now it's time to go look at the qualitative side. It's time to dig in and really unpack, what's really going on there. I love that, finding that the why behind it. Because that's really what we're looking for. It's not just a number, but it's, why is it happening? Because we can't address a what, but we can address a why.
Totally. And I think the cool part about SaaS in particular is that there's so much existing market data about SaaS
Yes.
companies and how they perform. And there's a lot of benchmarks, and we have a lot of data about what does good look like, what does great look like, and what does like maybe not so good look like. Benchmarks are tricky, but they are so useful, I think, for early stage SaaS companies because they give you a sense of what's normal and maybe what should be explored. And that is information that is readily available. Google, ChatGPT, all of these places will tell you. And it still surprises me to this day how many, especially bootstrap founders, don't actually know like what does a opt-in B2B SaaS free trial convert at? What does a healthy churn rate look like? What does a healthy, website to trial conversion rate look like? There's so many founders out there that have no idea what those stats are. I live and breathe them because this is my work. But I just had a conversation actually with some founders the other day, and they were blown away that it was possible to get more than a 15% conversion on a free trial, like B2B SaaS opt
Wow.
in. They were sitting at like 3 to 5, and that's great for freemium, but pretty terrible for, B2B free trial opt in.
Right.
And
Right.
so they were like, what do you mean other companies are getting more than 5%? Everyone I talk to, they're not getting that much. And I was just like, oh my gosh, I don't know a single company that got more than 2 million that didn't have at least a 15% activation rate. So they were kind of
Right.
blown away by that. And also too, like, peers, surround yourself with incredible peers, don't get me wrong, but you also have to be careful because sometimes their stats might make you feel like, like what you're doing is not so bad. And it's like, I mean, fair. But you also have to keep in mind that this is still not a marker necessarily of a healthy SaaS business. So that's something else to keep in mind too.
If you want to deeper dive into this and get a scaling roadmap, then grab my book, Small Fish, Big Pond, Building a World-Class Business That Swims Circles Around Competitors. Small Fish, Big Pond delivers powerful marketing and leadership lessons guaranteed to enhance your marketing message, wrap value around your clients, and guide their buying decision to conclude that your company is the only solution for them. It includes step by step frameworks and time tested growth principles to attract ideal clients, convert them, and then transform them into your brand ambassadors. Pick up their print, ebook, or audio today at smallfishbigpond.com, Amazon, or your favorite book source. And all book profits go to charity always. Sure. A sample size of 1 or 5 is not a good sample of the market. And you can't make a benchmark from that.
Totally.
Well, product-led growth is one of the things I see done wrong a lot of times, and I had Wes Bush on a few weeks ago talking about that and how to do it. How do you see users getting through that process, progressing through activation? So they do the free trial, and how do we get them, one, using the free trial during the trial period, whatever it is, and then moving forward and into paid and really
Yeah.
activating and making the software, do what it's meant to do.
So yeah, I like to think about product led growth. At least my take on this, it's like the combination of jobs to be done. So what is the job ultimately that this person is hiring the product for? And they may have a very specific outcome in mind. Like, so if you sell CRM software, it could be I want to track my contacts, or I want to close deals, or I want to manage a sales pipeline. Those are very specific outcomes that someone may want to achieve with a product. And obviously, like the outcomes for your product will look different.
Sure.
But then there's also the behavioral science aspect of this, where again, like the motivation has to be high. And at the same exact time, the product experience has to be such that it is relatively effortless for them to accomplish their goals, while at the same time still giving you enough information to create a meaningful experience. What I mean by that is there are some products out there that don't have enough friction, actually, where like anyone can sign up. And surprise, surprise, because anyone can sign up, the right people ultimately don't accomplish their goals. There's Because the product team is trying to cater to everyone instead of to a very specific subset of people. But product led growth, I think, is most successful when you're able to combine this really solid understanding of who is the ideal customer profile. Are they ultimately product qualified? Meaning, like as they are signing up for this process, we are now understanding like, is this person actually going to be a good fit for this product or not? And then also, what are they trying to accomplish with that? And then how can we create an experience that activates them in a way that again gives us the information that we need, but at the same exact time is as seamless and effortless as possible. We get into a lot of UX discussions, design discussions, and we also get into a lot of onboarding discussions. Like, what does sign up look like? And then what does onboarding specifically look like? And what are the key points that qualified users have to hit in order for them to get to the aha moment as quickly as possible? There are examples of this working extremely well that I think a lot of product-led growth companies look to as guidance, but I think it was usually a SaaS company will have a value metric is not the right term. I'm going to completely forget what it's called. A North Star metric. It's a North Star
Sure.
KPI
Yeah.
where we need to get, so Airbnb, for example, is we need to get someone booking within 2 days or something to that effect. It's something like that. So a new qualified user needs to book within 2 days. Facebook, I think, is make 10 friends within like 5 hours or something like that. Like send 10 connection requests in like 5 hours, something to that effect. I can't remember exactly off the top of my head. But every SaaS business has that North Star KPI that from a product and activation perspective, they are ultimately driving to, but specifically for qualified users. Non-qualified users need to be identifiable. And also, it needs to be something that we can actively measure. So that way we can figure out what to do on the marketing side to decrease the number of unqualifieds and increase the number of qualifieds. But I think that the qualified metric is a very important thing to keep in mind is that you're really not optimizing for everyone. You're actually optimizing for, again, that product market fit, but it goes back to your go-to-market strategy. And the more solid understanding that you have of your go-to-market strategy, the easier it's actually going to be for you to build product, but then also design and activate around the product.
Yeah, it's really smart to think about it that way. And
It
how
all
much of it
fits
do you
together.
think yeah. How much do you think is product related and how much is how they market, how they position the product, really the go-to-market piece? How relevant is the product? How good does it have to be? Or do you really focus more on the marketing side and telling the story?
So this is really market dependent. And again, if you do your research, you're going to have a pretty good sense for how much product do you really realistically need and also how good does it have to be given the market that you're targeting and also given the alternatives. So for example, I use this example all the time, by the way, in podcasts, and I have to get a new one because I'm sure like the guy who actually runs this company is like, okay, Asia, tired of using me as an example. But CRM for trucking companies, for example, you create a CRM software specifically designed for trucking. uh, Chances are trucking companies probably don't use a lot of like wild and crazy software. My guess is that just from an industry perspective, in like the trucking and like manufacturing and gosh, the other word I can't think of, but in this industry, the software that they use is probably pretty terrible actually. Lots of clunky, overbuilt, not very pretty things. And
Sure.
so from that perspective, if you come in with even like a moderately decent UX with moderately decent features, you could probably win. Let's compare that, however, to let's see, what's a really high project management software. Thousands of tools. I probably hundreds of thousands actually by this point. There are thousands of project management software solutions out there.
Yep.
The UX
Absolutely.
experience, the feature parity that you probably have to bring to the table in that market, depending on, again, who you're targeting, probably a much higher lift. So this is market dependent, I would say. It's not, there is no finite answer of like, you've got to have I mean, obviously you have to have a killer product, but killer product is relative to, again, the market that you're targeting and also the
Right.
competitors.
Right.
So killer product is 100% relative. And if you do a really solid job of understanding your market and also getting as focused as you possibly can, you're going to have a really good gauge of like how big does this really realistically need to be. ConvertKit is actually a really good example of this. So
Yes.
ConvertKit is, the billion-dollar unicorn that everyone loves now. But when it first started, I mean, it's an email marketing platform, very simple. When it first started, it was targeting bloggers, like lifestyle bloggers, food bloggers, and the email software that was available to that market at the time. I mean, there was MailChimp, but beyond that, there really wasn't a whole lot. Like you either had to be like a Pardot buyer, like, or you had to buy these like really big bloated marketing automation platforms that these like little food bloggers, they don't want to pay for that. And like it's way too big and way
Right.
too expensive, way too clunky. So ConvertKit comes out with this very nimble, very specific email marketing solution just for that part of the market with the goal obviously of expanding to creators in general. And now it's by having that focus and then also carefully expanding over time. Now it's this big giant company, which is really impressive. But again, like ConvertKit, it, I mean, the alternatives I think were Drip at the time. There were some others, but it's all relative. What solution did food bloggers have at the time? Not really much apart from MailChimp. And even then, I think barely. So that's the kind of like relative, do you really have to have a killer product? It depends on who you're targeting and what they're competing with.
I think so often founders, especially if they're technical founders, they're really focused on the product itself, and it's got to be better, got to be better. And I love that. Just picking a market and going after it. And who would have thought? Food blogger mail software, turns into a unicorn. But I think it's kind of that counterintuitive, really focused and going after a market that's completely underserved, and then serving them really well, and then continuing on and growing from there.
I think too, it paints the picture also, or the dichotomy between a bootstrapped business versus a funded business.
Oh,
I
100%.
think funded SaaS businesses, they're very splashy, and they tend to feel pretty broad, I think. Whereas you look at very successful bootstrap founders and you find that like they've focused, maybe not niched, which I think is different. So like CRM for trucking companies, for example, is definitely a niche, but you can have focus, which is what ConvertKit did. So they focused in one particular area and then they expanded their focus over time, but only when they could afford it, only when it made sense to. But I think there's maybe like a false pretense that, you have to launch really big and splashy and that you have to target everybody. But I actually find that even for funded businesses, focus in a particular market space usually is way more impactful and effective because it gets easier to make decisions, one, and then two, it helps you build something that is much more sticky, in my opinion. But that's just my 2 cents.
No, absolutely. I have a chapter in my book specifically about that. I mean, and it's one of the principles. If you want to get big, go small. And then when you think you're small, go smaller, and until you think that you're really scared because you're so small, and then go a little bit smaller. And that focus is really one of the things that unlocks. Because if you're trying to sell a CRM to everybody now, there's no way, unless maybe if you have billions in marketing spend. But when you focus CRM for trucking companies, now you've got something. And
Right.
then you can expand out and expand out. And there's lots of other companies that are in adjacent markets. But if you try to take on all those at once, game over. It's so crowded out there. So I love that advice. I think it's really solid. Well, what are some other growth practices that SaaS companies should prioritize to achieve long-term success?
Yeah. It is such a good question because I ultimately do think it goes along with what your goals are. If the goal is to get as big as possible or even to like let's grow as sustainably as possible but have fun while we're doing it, I think there's several things to be thinking about. So my experience ranges across everything from early stage to traction to scale up. I've worked with like big huge enterprise companies. I've also worked with companies that don't even have a product yet. And what I find is it really just depends on your goals. But I think that the thing that I encourage the most is to get to a place to where your growth process is just as important to you as your marketing processes and your product processes and any other departmental processes. Growth is holistic across the whole business. And
Yeah.
what I highly encourage is to not create silos too early in the business that makes it awkward for teams to come together later. So what I mean by that is you're growing, you're tanking along, maybe you get to 50K MRR and then eventually like you get to a million ARR and then beyond. Right around that turning point, I find that's when it really becomes critical to start establishing growth processes, meaning you're getting marketing, product, sales, whoever else is involved, success, support. You're getting all of those growth leaders to the table and you're saying, okay, guys, what are our targets for this quarter? How are we going to work together? And what information can we start sharing with each other? And then that can evolve into, okay, what's the KPI or set of KPIs, usually 2 to 3, that need the most attention and start creating those cross functional growth teams. What I find is a lot of times growth can, like, teams try to tackle growth in silos. So marketing just focuses on
Yep.
marketing growth, product just focuses on what new features can we build, sales is, pipeline, closing deals. And it's just so easy to get so siloed so early. And I've seen it
Yeah.
happen. But I think growth processes, and even if you're a solo founder, you can actually do this for yourself. So every quarter, every semi-quarter or semi-half year and then every year. Most even solo founders have some type of strategic process. But what I would encourage is, what is the KPI that would give you, like, if you were to improve this, it would just blow your growth like out of the water. Like, it would help you accomplish your MRR goals, whatever it is. And then from there, once you identify like what that core KPI is, then identify across the business what are all the different things that could be impacting this. And that's how you can divide and conquer your growth projects. And if you're a solo founder, you're marketing, your product, your sales, you're all the things. So in theory, like, you can tackle a lot of this on your own. But even when we start looking at more established teams or even like small teams, like maybe there's just a team of like 5 or 6 of you, you can start running growth projects and even growth experiments early, and it can create a lot of benefit for you in the future. The thing I worry the most about bootstrap founders that grow their businesses is that they don't, ironically enough, adapt a growth mindset, meaning they're not necessarily thinking about the processes that they use internally to encourage growth. And also, there can be a little bit of fixation on the top of the funnel stuff and not enough on the bottom of the
Sure.
funnel stuff. So, what I mean by that is, this is the sneakiest KPI, I think, in the SaaS world, point blank, period. But net revenue cohort retention, this is a report that everyone has. If you have ChartMogul, Barometrics, I think, has this, and ProfitWell. Most people, I think, are on ProfitWell. ProfitWell, I think, has a huge market share for early stage founders and especially bootstrap founders. Everyone has net revenue cohort retention, and yet it's the KPI that is so sneaky. It won't kill your business, but it will stall your growth for a long time if you're not careful. And it's caused by not enough customers staying over long periods of time, and also not enough customers upgrading into new plans. So what happens is your churn, and this is the wild and crazy thing, your churn might actually be very healthy. Revenue churn might be like 4 or 5% month over month, but your net revenue cohort retention, if you don't have at least 80 to 100% of revenue retained after 12 months, you're going to have a hard time growing. And that might sound crazy, but if you were to pop open your ProfitWell right now and go look at this chart, you might be shocked to find that you're sitting at like 40, 50%. And what that means is every year you've got to replace half of your revenue.
Yep.
That's a
Filling
really,
leaky bucket.
yeah, it's a leaky bucket, but it's
Yep.
sneaky. And it's something that most founders don't know about or teams don't know about. And so anyway, I'm on this tangent, but that's the type of like annual or semi-annual or even quarterly review that needs to happen, and the discussion that needs to happen, because that KPI, tons of things impact that KPI. Like, it's not just one thing. Like, it's not just, oh, marketing, go do this. Like, it's actually, no, like, we have to have a strategic, holistic conversation between all the growth leaders. And if it's just you, that's, you obviously. But if you have a team, that's the type of analysis and discussion and strategic planning that needs to happen. And then also data gathering. We talked about gathering data. That you need qualitative insight for that. You need quantitative insight. You need to be able to come together as a team, and that should feel comfortable. It shouldn't feel weird. Like, you don't want to get to 5 million ARR and you're doing that for the very first time. I mean, you could, but
Right. Right.
it would be good if you did. It's better late than never. But if you can have that happen earlier, then you can create a culture of growth and not a culture of growth in silos, because growth in silos does not make the big thing happen. Growth together is what makes the big thing happen. And I think that's the thing I want to encourage the most for bootstrap founders, especially that are growing their teams. I think VC funded founders have to kind of do this from day one anyway, because usually they're kind of building a team like immediately. But I think bootstrap founders in particular are especially susceptible to this. And they often don't realize it until growth is stalled, and it's stalled for a long time and they can't figure out why.
Yeah. What are some other red flags or warning signs that might indicate, SaaS company may be heading towards a cliff?
Or just like absolute stagnation. Yeah. So I actually look at expansion revenue. So the percentage of expansion revenue of MRR growth. So for example, again, I'm going to use ProfitWell as an example here, but whenever you look at like your MRR growth chart and it's like going up and to the right and you're really excited, at the bottom of that chart, there's like a table breakdown, and it tells you how much new MRR did you generate, how much expansion MRR did you generate, and then also how much like previous MRR did you just already have. Then there's like the losses. So how much did you lose? And what I calculate is, out of the total amount of MRR that has been gained, I look for what percentage volume was the expansion revenue. If it's more than 40%, that company's killing it. Like, I'm like, whoa, that's awesome.
Yeah.
Usually they're killing it. Not always, but usually they're doing great. It obviously depends on how much they're turning out. But if it's like 40%, that's a pretty good number. If it's like 10%, not bad, but it's definitely like, okay, how can we increase that? And usually that tells me that monetization is actually a project for them. It usually tells me that there's something about the plans that are not like, there's something that's not creating expansion. And it could be that it's the plans, it could be that it's the product, it could be a lot of things. But if it's less than 40%, that tells me that there could be some optimization that could be done here, but it's contextual. Obviously, it depends on a lot of different things. But what I can say though, if it's less than 10%, expansion might actually be a huge opportunity for you. That's something that we're leaving on the table because basically we're saying we can only grow by adding net new MRR, but the SaaS flywheel, like the dream is to have companies come in, land, and expand. And like that's where real growth momentum comes, where you're doing that more than you are losing. And now you've
Right.
got net negative churn. That's really cool to have. It's possible. I've seen it. But yeah, those are the types. So that's like an opportunity KPI that I look for. And then I would say I'm also always looking at activation rates on a per cohort and segment basis. And this is where you get into a lot of data, obviously. Not all teams are this sophisticated, but if they have this data somehow, some way, maybe the founders or the CTO just so happen to be like really gung ho about collecting data. If we can calculate this, we basically would say, like, okay, so maybe you've got three different ICPs. ICP1, you can identify them pretty easily. ICP2, you can identify them. But maybe ICP1 is not converting as effectively as ICP number two. And so then it becomes a project for, like, I wonder if there's anything that we can do here. But that's something that you would only really know if you're like really digging through the data and you know what to look for. And knowing what to look for is honestly half the battle. And then it's what do we do about it? But yeah, so that there are things I look for in terms of like, are certain segments performing better than others? If we're collecting that data, if we're not, then what can we do to start collecting that information? Because you're going to want that 6 months from now. And then there's also just some of the financials, again, like that percentage of expansion revenue, net revenue cohort retention is always a telltale sign for me. And then growth, I mean, MRR growth rate is an interesting indicator also, but I would say it's the devil's in the details for me on that one. I think just looking blanket MRR doesn't tell me as much. Like, yes, like it's great to see the chart go up and to the right, but you really want to know, like, what was it about our growth that made that so effective? And then conversely, what's not effective about this? There are things also too, like there are some growth experts that use things like quick ratio, but I don't use those as much these days, at least for early stage. But yeah, that's a little quick rundown of what I look at.
I like that. SaaS industry is certainly evolving. And over maybe the next few years, what trends or changes do you think will have the biggest impact on growth strategies?
Yeah, this is a great question. The theme is sustainable growth. It's sustainability. I think the last few years have been so interesting for SaaS and also for tech in general. Everything from, losing Silicon Valley Bank to the pandemic to like all these things. And I think, and then we also have stories like FTX and, WeWork and Theranos and all those. I think
Sure.
the overall vibe is, what does sustainable growth look like? Not the big splashy crazy growth, just sustainable, like the stuff that we know works and does not require such big risks. And sustainability ultimately comes down to your team, your business, and its ability to be able to troubleshoot its growth. And also, I mean, I hate to say the word, but to be strategic. And I think that strategic growth ultimately is a sustainable practice. What I mean by being strategic is, all being strategic means is we are doing our absolute best to make good decisions with the information that we either have or can get. And if we're not making the best possible decisions, then we're not being strategic. That's like the basic version of that. When it comes to growth, ultimately comes down to, are we providing value to the right people? And are those people staying around, expanding, recommending it to others, and ultimately being raving fans? And that is a cycle that is very, you can't force customers to become customers, of course, but I think SaaS is so uniquely positioned to grow and to just, like, we have so much connection with the customer. Like, there are businesses that never even see the customer out there. You know what I mean? Like,
Yes.
I guess what I'm trying to say is that SaaS is there's a very thin wall between it and the customer at the end of the day. And I actually think that it's perfectly poised for sustainability and for strategic growth. But I think the mindset needs to shift a little bit. And I can already feel the tides turning. I'm having conversations with early stage founders, for example, that I didn't think I would have ever have had. But just because so much of the narrative around SaaS for a long time was growth at all costs. And also not
Right.
just regular, not but like splashy growth, 10x, 20x, to the moon. And now we're hearing the more like, what are not just like what are the quick wins, but like what are the sustainable wins? What's going to keep us in business not just 3 months from now, but like 20 months from now? And that's the type of
Right.
decision making that I'm seeing the tide turn on, which is great for people like me, at least, who I'm a huge proponent, obviously, of strategic growth. But yeah, and then at the same exact time, I'm seeing enterprise companies do the same thing. So we're wrapping up a huge B2B enterprise research project, actually, and it was all in the name of helping this company better adopt PLG. And they are also thinking, they're not just thinking 6 months from now, they're thinking 3 to 5 years from now. And they're thinking, what information and insights do we need to make better decisions so that way we can prepare for this future? And it's refreshing because I think that's a culture that you just don't hear a lot about. It's not as sexy or splashy, but that's what
Yeah.
ultimately helps companies become 100-year companies and not 2-year companies.
And that's what we all want to be for sure. Where can people learn more about you and about Demand Maven online?
Yeah. Okay. So I've been lurking a little bit on Twitter these days. I haven't really been posting much. So I would say I'm definitely on Twitter. Every now and again, I'll post, but mostly I'm just lurking. LinkedIn is really the spot where I'm putting my content. And I do actually have a newsletter called The Work. It is all about the work of doing exactly this, of analyzing data, making strategic decisions, gathering insights, thinking about all the ways that we can interpret the information and how do we actually apply it to our businesses. And you can find that on my LinkedIn profile, but you can also go to demandmaven.io and navigate to the work newsletter from there. You can sign up. I post in sprints. And what that means is basically I take off the holidays and I mostly post like spring, summer, and then fall, and then I take off the winter. So I'm actually going to start kicking it back up in the next few weeks. So if you want to get the very first, hits to the inbox, then sign up, of course. But I'm actually going to kick off with talking about the work that we did for the enterprise company and then how I think that actually mirrors so much of what early stage bootstrap founders also do. So it's really for SaaS people in general, of course, but especially if you care about growth and insights and data and like how to actually use that to improve your business.
Fantastic. We'll make sure and link that in the show notes as well.
Awesome.
So
Thank you.
Asia, great having you on the show today. Thanks for being on SaaS Fuel.
Thank you so much. This was a pleasure. And yeah, hopefully everyone got something out of this.
Without a doubt. Thanks again, Asia, for coming on the show and sharing your insights and resources. You can learn more about Asia and Demand Maven at demandmaven.io. As always, all links, highlights, resources, and full show notes are available at saasfuel.com. And be sure to check out our YouTube channel as well. Please consider sharing this episode as a gift of knowledge to someone who's eager to learn and grow. Everyone who shares this week gets a hype heater. It's a device that warms up the market to your offerings, cooking up a frenzy of demand that's hotter than a summer barbecue. Join us next Tuesday, where our founder is Vlad Gosman, CEO and co-founder of Involve.me, an AI-powered quiz funnel and business form builder. This is an episode has a crazy story of connection, super lesson on how to do PLG in the way that converts. And next week on our SaaS Fuel Expert series, we have a real technical treat. We have Sandy Riza, lead engineer on the Dagster project, which is an open source data orchestration platform used in machine learning ops, data science, IoT, and analytics. So I will see you next time. And as always, enjoy the journey.
Thanks for listening to SaaS Fuel. Full show notes for each episode, which includes a summary, key takeaways, quotes, and any resources mentioned, are available at saasfuel.com. Be sure to follow and subscribe wherever you listen to podcasts. And if you're enjoying the content and getting value from these episodes, please leave us a rating and review at ratethispodcast.com/saasfuel. We'll be sure to read these out on future episodes.